Jay, welcome. How difficult to read is this macro environment when you're dealing with customers, and how much of that is perhaps moderated by the fact that you're clearly, as such a young company, growing share?
Yeah, it's definitely a more difficult environment. There's no question about that. I mean, we saw increased pressure on deals, things taking a little longer. Certainly a handful of companies are just putting a little more inspection on where money is being spent. But we came through it. I think it helps. I think times like this, it kind of reveals, which things do you really need to have and which things are actually helping you save money and free up, critical employee resources to put on the most important things. And we felt like we benefited from that in the quarter.
So how are you recalculating that in this environment, and how is the partner ecosystem influencing that?
Yeah, this is definitely a situation where anything that helps give leverage to the organization is useful. And so we've had strong partnerships with the cloud providers, with other tech companies. We were won, Partner of the Year awards from Microsoft and from MongoDB. We talked about that in the earnings call. These obviously help us, being kind of part of the stack that is being put in place, that's allowing more efficiency, that's the thing that customers want to get to, is definitely a good place to be.
Your number of customers with annualized recurring revenue over 100,000 was up close to 40%. What does that signify about this market and even about net revenue retention?
Yeah, the exciting thing for us is there's a major new paradigm around data, which is data in motion. When we think about data, we mostly thought about, hey, how do I store it? How do I keep it locked up in different places in an organization? But the problem now a lot of companies have is, how do you put all that together? How do you build something holistic where all the parts of the company act together? And that's what we do. And so, what that means is, it's a big market opportunity. Our expectation is to grow even through harder times. And that means we're continuing to add customers. We're excited about all the new customers coming on board with new use cases. And we were excited to see that through the quarter.
How's the market affecting competition for talent? Seeing a lot of hiring freezes, some layoffs, some calls, as we were just mentioning, over at Alphabet for increased productivity out of employees. Stock is a big part of comp in the Valley. How are you managing that?
Yeah, that's one area where things have gotten a little bit easier. We've been able to hire great people through every up and down, through the pandemic, all of that. I think that's ultimately about what's the opportunity for the company, and people are excited about what Confluent's doing. But, in a situation where there's less hiring happening, where a lot of companies are freezing or cutting back, that does mean there's more great people out there. And so we're continuing to hire aggressively, and that's a great thing for us. It means there's amazing talent out there, and we're happy to talk to all those people.
All right, continue to hire aggressively. The stock is aggressively higher this morning by almost 10%. Jay Kreps, CEO of Confluent, thank you.